Hey, good morning, and thank you for tuning in again. This is our third installment of our weekly portfolio update that we do. First week we talked about inflation and how it affects your money. The second week we talked about how we try to protect your money using stop losses. So this week I thought I'd talk a little bit about how does the Lake Advisory Group put together a portfolio for you. Now, unlike most people, we do not believe in using mutual funds. We believe in using individual stocks. So what we do is we try to pick good quality dividend paying stocks that you and I are going to understand what they do. You know, I understand what Waste Management does. They're a garbage company. I understand what Coca-Cola does. I understand what Ford does. I don't necessarily understand a lot of the high-tech companies and what they do, and they don't pay us a dividend, so they're not paying us to own that particular company. But it goes a lot deeper than that. Once we identify a company that we want to make sure that, one, it is undervalued. We don't want to pay $100 for a company that's only worth $80. So we want to buy that company when it's out of favor with the general public. So we want to buy a company that's undervalued. We want to buy a company that pays you a dividend and that has a history of raising that dividend. Because again, as we found out in the last couple of months, a dollar today won't be a dollar tomorrow. So we tend to look for companies that have that history of raising that dividend over time. If you look at a company like Procter & Gamble, they've raised their dividend every year for over 100 years, or right at 100 years. So that's a good quality dividend paying company. Then we want to look at companies that are consumer driven. Companies that no matter how bad the economy is, no matter how high taxes go, you're still going to have to purchase those products. Cell phone companies, food companies, different things like that. Things that you are going to understand what they do and you're going to use them. I mean, it doesn't matter how bad the economy gets. You're not going to keep your own trash. You're not going to stop washing your hair. You might stop visiting your grandkids or your children, but you're not going to stop calling them. So these are companies that are going to do well, and regardless of what kind of an environment we're in. And that doesn't necessarily mean they won't go down, because they will. But they should typically, they go down as much and they recover faster. And like I said, one of the things that we're looking for, and what basically what you're seeing in the market today, is you're looking for that, you're seeing that transition from growth to value. And what that really means is, let's take an example, XYZ company that's a growth company. They're buying them today based on what they think they're going to do 4 or 5 years down the road. What we choose to do is to buy a company that already has earnings. We already know that they're making money. That way they can afford to pay that dividend. Because again, every day somebody comes in here and they say, I was playing golf with Joe, and Joe told me he's got this company that's paying a 22% dividend. And then when we do the math on that dividend, we find out that they don't have any earnings. So that's kind of like you paying your children $1,000 a month when you're only making $800 a month. Eventually, you run out of money. Same thing with the company. Then the company has to cut the dividend. They have to quit doing some of the things that they're doing, and that's a disaster for the company. So we want good quality companies that have just shown us a history of doing well over time. Now, to go back in the Wayback Machine, when I got into this business in 2000, almost every new economist was saying that Warren Buffett didn't know what he was talking about. He was old economy. His way he did his portfolio doesn't work anymore. He just doesn't understand. Well, flash forward to today, Warren Buffett's still around. Most of those guys are out of business. Now, so that's kind of how we put the portfolio together. And then once we get it together, we put the stops in place just in case, and we monitor it continuously. Thanks for tuning in today. I hope you have a great weekend, and we'll talk to you soon.